Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, January 11th, 5:04 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, still in a correction, but a short-term uptrend within that correction that got a little bit stronger today. Check the trend gauge over here. Still neutral with a green sub arrow on leadership. Short-term upgrade to bullish as the lone holdout forever. The NASDAQ 100 got its second close above the 21-day exponential moving average. So we're in a confirmed short-term bullish uptrend versus the 21-day exponential moving average. We improved a little bit more on the 50-day moving average as the NASDAQ 100, again, the QQQ with its first close above the 50-day moving average. This was the leading index today. And long term, we got another index above the 200-day moving average today, that being the small cap index. So now we've got small cap, mid cap, and Dow above the 200-day moving average. What just happened? I kind of let the cat out of the bag there. Was it a CPI front run today? Well, let's take a look back. We will shortly when we get to the charts, back at December 12th, when it looked like the market was front running CPI again, and it was up 1.4% on the day on the S&P. Strong close rally, virtually identical to what we saw today with the strong close pre-CPI. Next day, we got the friendly CPI number to the market, had a big gap up. But then within 30 minutes reversed and gave up 80% of that move. The market, I'm reading about all kind of positivity that people just seem positive that inflation is absolutely coming down. But I've also seen some people saying it's not. In particular, the Cleveland Fed shows it at 6.8%, which is above the expectation of 6.5%. What's really going to be important is the reaction to it, as always, and that's what we will keep an eye on. So the numbers on the day: G6 up 1.6%, growth stocks improving, growth indices improving. IWO got above the 200-day moving average today. S&P 500 up 1.28%. NASDAQ 100, as I said, the leader, up 1.7%. Dow, the laggard, again up 0.8%. Mid caps up 1.2. Russell small caps up 1.2. Global diversified 60/40 up 0.87%. GROTECTION in-house, again, the laggard, up 0.34%. Don, you suck. Why do you do these videos when you're lagging the indexes the way you are? Well, anybody that hasn't listened to this explanation before, I want to clear out that our approach, which is basically trend following, where are we versus moving averages across 3 time frames, and how are leading stocks acting? It doesn't go up straight and down in line with the market. There are different expectations under different market conditions. And right now we're coming off of 4 days removed from being underneath all 3 of the moving averages that we track: the short term, the medium term, and the long term on the S&P. And when you come from a correction in a bear market into the early recovery, you see moderate underperformance as the market makes the turn, and we start to gear up in our index exposure, in our leading stock exposure. Uh, but when you could, it's part of the game. It's part of the approach to have moderate underperformance when you have major outperformance, when you're able to get out of the way of bear markets and severe bear markets. Strong bull market. We've shown the last half of 2020 how major outperformance, we can outperform in a major way versus the S&P 500 when growth stocks are firing on all cylinders, and all the different nuances in between a strong bull market, a severe bear market, and early recovery. So the stats over time, over the last 5 years, we've broken it down into these 9, 10 different categories, and um, this is how it usually plays out. So, and this is where we are now: modern underperformance. We're up less than 1% on the year, while the S&P is now up over 3%. So let's get into The charts, as always, we review the 5 major indexes and leading stocks, go over the tail of the tape. We always start with the S&P 500. This is the benchmark. Really, the benchmark is a combination of stocks and bonds, but uh, everybody always wants to compare you to the S&P 500. So here is the S&P 500. Here's the first move up on the 6th. This was the follow through day. Got us from trending below the 21. Second day we got above the 50 but failed. Yesterday back above the 50. Today our second close above the 50. Actually a close above the 40 week. As you can see here, we've had closes above the 40 week before. We're actually only one above the 40 week before, going all the way back to when the correction started, but they failed. So will it be different this time? That's what the market seemed to be betting on today. The Treasury futures indicating that the uh, CPI, the market, the let's just say that the way the market is positioning itself, it thinks the Fed's going to have to stop raising, and they won't get to 5%. Other Fed members, they're steadfast that they've got to keep inflation under control. They think if they let their foot off the gas at all, that inflation will immediately spike back up. So it's going to be a big battle all throughout 2023, and we're here to give you the play-by-play every night. So we're just now 0.4% below the 200-day moving average. We just revisited it 4 weeks ago. Before that, we visited it 2 weeks ago. Back then, it was all the way back to August. Failures every time. Will this one be different? Time will tell, but we'll see at 8:30 a.m. tomorrow morning what CPI is, and then more importantly, what the reaction to CPI is. So here's the NASDAQ 100, strong out of the gate today. Amazon leading the way, up 5.8% on Amazon. So you can see the NASDAQ 100. This is its second close above the 21. And slightly closed 0.2% above the 50-day moving average. So continuing to make progress. This big area of resistance here is around 278.50, which was the lows that held during this consolidation when we couldn't go higher, while really all the indexes were going higher. And then we broke down with the Fed, the FOMC, when Jay Powell said, "Hey, I said higher for longer for the 50th time." And the market believed it for, well, a couple of weeks before going sideways, now trying to come up the right side of that again. So we're at 277.50, 278.50, a key resistance area here. Let's see tomorrow morning when we get to that level, if we hold it, if we reverse at it, or if we blow right through it and take a shot at the 200-day moving average, which is now still quite a ways away, 6.4%. Let's move on to the Dow Jones Industrial Average. Dow approaching the 34,000 level again. Note over the last 2.5 weeks, relative strength lagging. That's typical when the market is trying to make a move higher. It's usually led by the growthier parts of the market, and the Dow's feeling that right now. We've got a 10% Dow position and a 5% SDY, which is a dividend ETF position. Uh, if these will outperform going down and they'll underperform going up. So we underperformed today. We should have done about a third of what the S&P does. Instead, we did a little bit based on what our beta was, but with SDY underperforming versus the S&P and the Dow underperforming versus the S&P, we did closer to 25%, little maybe 28% of what the S&P did, and part of that was still that last piece of ELF that we got rid of today. No bounce whatsoever in that. There's the Dow. Let's go to mid caps, higher high, multiple closes. Once it broke above this 450 area, it back tested it and continued to move higher. The leading index right now is MDY from a relative strength standpoint. IWM, looky here, another close above the 200-day moving average. Not novel. We've gotten above it back in August. We got above it in November. We got above it in early and late November. We got a spike above it in December, and on that reversal. This was the CPI reversal, by the way. And here was the CPI up 1.8%. on the prior front run on 12/12. But here we are again, closing above, two closes above the 50. This is all progress, also showing relative strength. So that's good. Let's go back to the Dow and take a look, or I'm sorry, to the S&P, and let's look at that front run last time, which was right here. We had a move up, we based, uh, broke below the 21, got back above the 21 the day before CPI on a 1.43% move, and then we gapped up 2.8% at the open, and peaked very soon after that. Let's see if it still shows on a 60-minute chart. Yeah, 1213. So here it is. Uh, Here's the gap up. We peaked within that first 30-minute bar, reversed. Next day was the FOMC. Jerome was very hawkish, and that led to the most recent leg down, a leg which, as of right now, did not undercut and does not look like it wants to undercut. Instead, forming this nice base here for about 3.5 weeks that we're trying to break out of today and see what happens when we confront the 200-day moving average, should we get a favorable CPI print tomorrow. So once again here, 12/12, 1.43%, virtually identical to what we're seeing today. A front run. You got the number the next day, but we put in a top. What happens if we don't predict here? Um, Maybe the market's expecting it. Maybe we beat and the market expects a bigger beat and we reverse. Hard to tell. We've got about a third exposure versus the S&P going into tomorrow. So we continue to go higher, and leading stocks continue to act well as they have been. We'll add exposure, and if we get in a full-fledged bear, we'll be ready to rock and roll higher. Let's go to a couple more indexes that we always want to see. Let's take a look at, I show a BND. This is a broad bond index. It continues to work its way higher. Higher means rates lower. LQD is just corporate bonds, high grade corporate bonds, and they broke above their 200-day moving average today, but show their junk bond counterpart, JNK, right into the 200-day moving average today. So prices going up, yields going down. That means there's little fear in the bond market. Let's take a look at 0TNX, the 10-year yield down with price up as expected, and the 30-year TYX yield down, price up as expected. I think there's a 5-year in here too, FVX. Yeah, here's a 5-year note, also down on the day. Really, the big move was last Friday at 10 a.m. when when those ISM numbers came out and the market treated them extremely favorably. I want to quickly take a look at, finally, before we move on, the equal weight S&P 500 making another higher high today, up 1.2%, and QQEW, the equal weight NASDAQ 100, poke its head above the 200-day moving average today. So again, acting better than their big tech counterpart. Not today, though, as it really was the big NASDAQ 100 stocks that led. We'll start taking a look at some of them when we get into the tail of the tape and the focus list. How'd the dollar do today? Always want to check that out. Dollar really didn't do much today. You can see it's just looking like a little dot. The dollar has been very tight for 3 straight days now, no doubt waiting on the CPI number also. How about the VIX? The indexes were up. Was the VIX down? No, the VIX was not down. With a binary event tomorrow, a little bit more risk coming in. It popped up, still below the declining 21 though. Let's shift to gold. Dollar really didn't do much today, but gold weak for the most of the day, but tight 3 days, just like the dollar has been tight 3 days, not really giving back much price progress at all. Silver down 1%, bounced at the 21-day moving average. Putting a little handle in here from this long cup, you can see that pattern recognition is putting that up now. We sold NUGT into strength yesterday. It gave up about 1.7% today. Here's GDX. also hanging at the top of the range, extended. Like to see this come into the moving averages a little bit more. Would not be surprised again for this to react in the opposite manner of how the dollar reacts to CPI tomorrow. Those are the big major indexes. Let's move on now to the tail of the tape. Uh, Positive stochastics are what we want to see from a technical picture, and that's what we have. VIX, as I said, up 2.8%. I did not check the fear and greed. I'll do that off camera very quickly and see where that is. It is at 54, so up 4 versus yesterday, still in the neutral category. The AAII numbers get updated tomorrow. We made reference to how low this bullish percent was last week, and sure enough, the market rallied on too low of a bullish percentage. This is one of the 60 lowest readings ever. They pointed out in on their website at the AAII.com website. So still battling back and forth between the short-term bull case, the longer-term bear case. Need to see a decisive move above the 200-day moving average on all of the indexes. Here's the CPI that we're looking at tomorrow. Last month, it was 7.1%. The expectation tomorrow for the headline is 6.5%, and the core 5.7%. Day count, the higher high made the up 2 of the reversal, up to a full up 4 count. Also, our fourth day above the 80 EMA and the 21 EMA. Next significant earnings come out Friday morning when some of the major banks report. That'll be interesting to see also. Expectations positive since the follow-through day. Another positive day. Front-running CPI, we'll see tomorrow. Broke above resistance on the S&P, just shy of resistance. I talked about this 278.50 area, just shy of resistance on the NASDAQ 100. Look at a 5-minute chart here. This was pretty interesting today. You could see the market trying to get a reaction out of the participants one way or the other. The algos do this frequently. Here's a 5-minute chart. We did the gap up. We tried to make a higher high. Then we based and went sideways. So at 10:30, the 30-minute range is set. And we reference the 30-minute range to see who's in control, the bears or the bulls, going forward. We tried to break it down after 10:30, but still holding the lows of the day here. The low of the 30-minute range was 39.32. Here we tried to break it below, and immediately it was bought up. So you see the 2 bars down, 3 bars up, and then just trending higher. Broke out. So this was really all in all a tight range for about 2.5 hours. Then we tried to break above this 39.45 level a little bit after noon. We went into 39.50, which was prior resistance. No surprise that we fall back there. Then we try to break out again, got up to 39.55 and a negative inverted hammer, and then another down candle, but we could only go down to 39.44 before bulls started coming back in again. Then another attempted sell-off down to 39.46. So now we're making higher lows, and you can't break down, you got to go higher. And we broke out above 39.55 here, a little bit of a pullback, but a very strong last 20-minute close. At this point, anybody that's short is concerned and trying to cover before CPI tomorrow, thinking that maybe the market knows something. But then again, uh, we'll see tomorrow. We don't predict at Revere. We interpret the results and get on the right side instead of guessing. So here are the strong sectors today. Bond prices up, which means bond yields down, gold, silver, and gold and silver stocks down, and XLP lagged. That's Staples. Actually ended up closing barely positive, but definitely lagging. And lagging Staples is good. That means some of the more growthy areas are acting well, such as biotech, which started a really nasty day down, but it didn't take long till late morning for them to reverse higher. They ended up closing at 0.6 and 1%, so a little bit less than the indexes. Uh, Positive but yellow means showing relative weakness, but still positive. Same thing with semiconductors. Those were weak early, ended up positive, still below what the averages did, but always a positive sign. 10 out of 11, actually 11 out of 11 now that we closed positive on XLP. 11 out of 11 spider sectors up. TAN actually absolutely reasserting its strength in the market. ICLN also looking good. Retail, ITB, this is a clean energy ETF. Retail, builders, although after hours, KBH reported, KB Homes, and they were down about 4%. They missed. And real estate was strong today. XLRE up 3.6%. How about that? Here's our focus list. Those are the charts we'll go through momentarily. We sold that last piece of ELF, bringing our beta from 0.35 to 0.33, so a third of the S&P going into CPI tomorrow. We got through another key level here, this 39.50, 39.60 November December support support resistance area, breaking above that. 39.70 is where we sit now. Next above us, note we closed above the 40 week at 39.54, but still below the 39.87 200-day moving average, and this will be down to either 39.85 or 39.84 tomorrow. It's given up about 2 or 3 points every day. So let's get to some stocks now. Let's take a look at TAN first of all. And you can see 4 days up, 4 strong days up on TAN, recapturing all the moving averages, putting in a handle here on this kind of ugly looking cup, but definitely reasserting its strength. And here's that ICLN ETF, Clean Energy, 4 days up also. Above average, but well, not above average volume, huge volume in here. Don't really know what was going on there. And then volume tapered off into the holidays, but stronger volume relative to recently, but still below average volume. But that's a nice looking bar there, up 3% on ICLN. Well, now let's go to some stocks here. SMCI. They're not all pretty. SMCI is proof of that. Tried to have a big breakout on Monday, gap down yesterday, lower low today. This reminds me a lot, though not as bad as ELF, which we got stopped out of today. Um, again, broke below the 50-day yesterday. No volume coming into this at all. So anybody that's have it is exiting in it. I would not be surprised if today put in the low, as frequently when you reference a high volume close day, the high here of 48.44, the low today was 48.46. I would not be surprised if that's the low. Wouldn't be surprised at all. But it is what it is. We took our loss, lost about 0.32% of overall AUM. Our goal with a position that size was 0.22, so a little bit worse than expected. That happens sometimes. And I mean, it is what it is. It's not life ending when you lose 0.1% more than you plan to versus your overall portfolio. Just obviously don't make a habit of it, and that's I think it happened twice last year to us, and one of them was Zim. We were talking about this in-house when I was reviewing my last year's trades. This is one that got away from me too. Zim Integrated Shipping Services. But anyway, let's move on. Let's focus on the positive and not the negative. On to another leader on the 21 over 21 NVO that broke the 21 today, closed at the top of its range, but this has led for so long. Maybe it's just time to consolidate or give it up. But 2 ugly days down on NVO now, while the rest of the market is doing well. But that's healthcare has been a little bit weak lately, and this is a healthcare stock. Next up, ACLS, semiconductor stock, very strong. You can see the volume there, raised their guidance after hours, continues to run. Certainly a leader, a little bit on the thin side, but getting our attention. PI, another one that raised guidance after hours, but look at that. There are no guarantees in the market. Went from up 5-6% to a reversal and down 0.6% on the day. EXAS, Exact Sciences. This is the poop in a box colon cancer company. They upped guidance, and man, 3 great bars there. You got your gap up, your inside day, and your follow through day today. Looking good. CCJ, uranium stock. 3 tight days, uranium acting better above the 200-day moving average. since it's back above all moving averages, it's getting our attention. If we would commit to uh, solar across the globe as a way to produce clean energy, these things can really fly. Speaking of solar, First Solar. Um, did I say solar? I meant nuclear, not solar. On CCJ, nuclear, not solar. First Solar following through to the upside, a fourth day up, reversing, closing at the bottom of its range, tried to break above this 174 high in the left side. This has gone pretty far, pretty fast, from 145-ish to 172-ish in 4 days. Probably needs to take a little bit of a break. IRDM forming a nice tight flag here after this big move up of 13% on 200% average volume, taking a nice little rest here. Very clearly one we're watching. Here's Amazon that was strong all day. Look at this bar on Amazon. What did the volume end up being? Why is this not showing? It was volume only up 17% above average. Early on, the first half hour, it was 500% above average, but it really didn't give back anything today. It just kept, and all pullbacks were bought. It looks a lot like the market. Here's your move up, pullback, being bought, trending, higher to up, making higher highs and higher lows, and a strong close. Uh, Great day for Amazon, and that's what propelled the QQQ higher today. Break above the 50-day moving average for the first time going back to September. That's definitely noteworthy. GE brought it to your attention but didn't buy it. 6, 7, 8, 9, 9 straight up days for GE now. I thought that this would cool off and the attention would go to GE Healthcare. Let's take a look at GE Healthcare. The attention's on both. Look at this move today on GE Healthcare, up 3.2%. I don't know that you can call 5 days a base, but technically, IPO bases I know can be shorter. I wasn't expecting this to move that fast, but new merchandise in the healthcare uh, doesn't come along very often publicly traded. So institutions very much taken a liking to that. We'll see if we can get a pullback on that, and we should have 2 more days until we get an ADMA to be able to reference price against. Celsius broke a downtrend line today, breaking above the 21-day moving average on above average volume. Bros, speaking of drinks, Bros trying to make a comeback, back above its MAs, still below the 200-day moving average. Very positive volume over the last couple of weeks. Let's see, Celsius Bros, and let's wrap it with Deere. This is high on our buy list. Like the relative strength as it reclaimed, when you get a close below the 50 and a reclaim of the 50, that's one of O'Neill's unadvertised buy signals. The volume wasn't there and it pulled back today, but it's forming a nice tight base. Fellow stocks Agco in the machinery farm group also looking pretty well, not quite as liquid, and Caterpillar not the same, but they often move together, has already broken out and is putting in a flag near the 250 area. So that's going to wrap it. As always, love to hear from you. Emails don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. I did not do our public service announcement today. Revere, we are active managers focusing on where the indexes are relative to moving averages. When we get below this black line, the 200-day moving average, we are at a maximum defensive position because all of these bear markets occur below the 200-day moving average. You do not want to get caught in one as you're approaching retirement. That's why loss control, downside protection, risk management, those are our number one job. That's 3 things, but it's really the same thing. That's our number one job. When you control risk, keep your capital intact. When the market turns healthy, you're ready to rock and roll from, and you didn't have to suffer through these big drawdowns. So again, if you're interested in that, give us a shout. Don@revereasset.com, 855 Real Wealth, 855-732-5932. After all, it's not how much you make in the market, it's how much of that you can keep. And with that, we'll wrap up Wednesday, 111. CPI very key tomorrow morning before the open. And this is Don Vandenbord telling it like it is. Thanks for listening and have a great day.